There's always new abbreviations coming out like SMB or ETA or LMM, and at this point you might be thinking WTF. Well, in today's video, I want to talk about different flavors of private equity and M&A that are very common today and really highlight the differences between what we'll call SMB M&A and LMM or lower middle market private equity. Stay tuned. My name is Nick McLean. I'm the most boring guy in private equity, at least in my opinion, and I've spent about 15 years in and around M&A, private equity, and investment banking. So there are a lot of different terms to describe SMB M&A, small medium business M&A. You might hear ETA, which is entrepreneurship through acquisition. You may hear the term Main Street deals, or you might even hear about search funds. Those are all, another category of M&A is what's called lower middle market or middle market private equity. Now, at a high level, I think it's easy to categorize those based off of two different criteria. One is size. Typically SMB or ETA is going to be small enough that you could use an SBA loan in order to fund a large portion of the transaction. So if you're not familiar, SBA loans are typically $5 million. Lenders can do what's called a pari passu conventional loan that partners up with that. But generally speaking, for these SMB, SBA, ETA type deals, you're looking at EBITDA of somewhere between $500,000 to $1.5 million. Now, I will say that there's a kind of a no man's land between $1.5 million to $2 million, because sometimes deals in that size range are a little bit too large to get done via SBA, but still a little bit too small for lower middle market private equity. Looking at lower middle market private equity, it's, I would say, $2 million in EBITDA and larger. Now, if you go on the internet and you say, okay, what does lower middle market mean? You might find different size criteria. It might be based off of revenues or enterprise value or all these other things. But the reason why I say 2 million is because, in my experience in working with private equity firms, the lowest most private equity firms will go in terms of EBITDA is 2 million. So that's kind of how I define the lower middle market. The other broad category I would say that they differ in is level of involvement of the person leading the deal. So on a ETA SMB deal, usually the seller is looking to transition out of the business. There's no one within the business to take over. And so the person running the deal is actually going to work as an employee in the business, as president, CEO, whatever they want their title to be. In lower middle market private equity, that's typically not the case. It's still common for the owner, the seller, to transition out of the business, but typically the companies are a little bit larger, so their ranks are a little bit fuller, and they might have somebody to ascend into that role of president or CEO. Even if they don't, typically what we would do is find somebody to put into that role. So even in circumstances where there is not an heir apparent, a person working in lower middle market private equity is probably not going to step in and be president or CEO of that portfolio company. Those are the two biggest categories. However, there are certainly more that are more philosophical differences, if you will. The first philosophical difference I would say is at the individual level in terms of the actual person. And how that relates is the mindset or how that person thinks about growth. From my perspective, many SMB or ETA folks are thinking about growth as a long-term thing. Let's call it 10 or 20 years. Most of the growth, at least in the early years, is going to come organically as opposed to via M&A. The type of or the level of growth that they're expecting is many-fold. The company might have 2, 3, 5 million of revenue now. Many folks within SMB or ETA are gonna really target double, triple, quadruple the revenues over that 10, 15, 20 year hold period. Lower middle market private equity is a little bit different. I would say in terms of the perspective, it's definitely going to be shorter term just because private equity funds have a defined life or duration. Additionally, in terms of growth, the organic side of growth is going to be more modest. However, there might be a more aggressive component of growth that they would try to achieve via M&A. Another philosophical difference is at the company level. It's the level of sophistication within the business. Now, if you look at a business with, again, like 5 million of revenue or so, you're going to have a lot of that keep a lot of the knowledge of the business in their head. And the reason for that is because the business is small enough for that to be possible. If you only have 3, 5, 10, 20 customers, a lot of times you have personal relationships maybe with all those customers, and it's easy for you to keep track. But as that number of customers grows from 20 to 100 to 1,000, I mean, it can quickly get way out of control. And if you don't have processes and procedures in place, then I mean it can destroy the company. I mean, you can just get overwhelmed and overloaded. And so as you look at the difference between SMB and lower middle market, again, the smaller businesses, they don't have those processes and procedures a lot of times because they don't need them. It's not until you start to get a little bit bigger where the challenge to keep everything in your mind gets more difficult and almost to the point of impossible, where it's out of necessity that these larger businesses start to implement processes and procedures, not only so that you don't have people keeping it in their head, but if Joe's really good at this, you want to be able to promote him to do something else. But if there aren't processes and procedures for the next person to take it over, that sometimes presents a risk. So lots of different reasons why the level of sophistication, the processes and procedures and whatnot are at a higher level as you look at larger businesses. The final area that is different is what the company needs for growth. So if you look at SMB, it's really a lot of times there are things that are needed that are more blocking and tackling, if you will, like the fundamentals of business. Perhaps there hasn't been a robust or even an effective accounting system that has been implemented. There hasn't been a way to track expenses to particular customers or products or service lines or whatever. And that really impacts decision making and how you think about growth. Additionally, what I would say is that a lot of times the whims of the owner are really what are pervasive throughout the business. You could be talking to somebody that's operating a machine and they say, well, Joe, the owner, doesn't really like to do it that way. It's pretty impressive that all the way at the operator level they know what of the owner would be as it relates to certain processes and whatnot. As you get to companies in the lower middle market, sure, the desires and the goals of the ownership are known to some degree. Responsibility and whatnot gets diffused through the different layers within the organization, as you no doubt would understand. And so as you think about growth from the lower middle market perspective, it's less about the basic blocking and tackling and focusing on eliminating obstacles, more about setting direction. As you want to grow the business, what are the 3 key areas that the company needs to focus on in order to take that next step? Does M&A need to be a part of the strategy? Do you need more equipment, a new facility? Do you need a sales and marketing team? Those things aren't easier questions to answer or harder questions to answer. It's just it's different. Thinking about going after a new product line or a new customer or a new geography or whatever, it's just different than putting in an accounting system so that you can know what your margin is for a specific customer or product line or service line or whatever. Not easier or harder, again, just different. And when talking about putting in an accounting system, as a SMB owner, not only are you going to determine that there's a need for an accounting system, you're going to need to determine what the accounting system is, how it needs to be configured, and then largely you're going to be the one to implement it. I would say for lower middle market, it's at least a little bit easier because to the extent that there's a new process or procedure or some new initiative, at the level that we would be spending our time, it would really be working with the management team, think about what needs to happen or the best way to happen that, challenge assumptions, get them to look at it from a lot of different perspectives. But at the end of the day, since we're not employees, we're not going to be the ones that are actually executing that strategy, if you will. So perhaps that area is in fact easier, but regardless, it's 2 different skill sets. And so perhaps For some people, the setting direction is harder, and perhaps for other people, that actual implementation is harder. To wrap everything up, again, I mean, SMB is smaller than lower middle market private equity. I mean, that's just kind of how it is. I mean, one's not better than the other. I think that there's a lot of room for SMB to be more lucrative potentially than LMM. There's the potential for lower middle market private equity to be more lucrative than SMB. Really what it comes down to is the person. I mean, are you the type of person that wants to take one small business and grow it from 5 million of revenue to 10 million to 20 to 30, work there for the next 10 or 20 years and that really be the or are you looking to do something to where you can work on many deals, have less involvement in each particular deal, hold those companies for a shorter amount of time, and just burn and churn, so to speak, over the next 5, 10, 20 years? I think you can make an argument for both. However, for me personally, I ran a company. I was worked for a company that made widgets, and I enjoyed it. However, I realized that what I really wanted to do is I wanted to work on deals, and if I wanted to work on deals, I shouldn't be running a widget manufacturer. What I needed to be doing was running a private equity shop. And here we are. That's what 4 Pillars is. And you'll hear me say this a lot, never claiming to be the most successful private equity firm out there. I think that we've got a lot of room to improve, a lot of room to grow. However, there are key things that I think that we are doing that we will always do that are going to be meaningful and resonate with business owners. And the key takeaway is that within SMB, there needs to be that relationship between the future operator or the current owner. That relationship is key, and that is one thing that we strive very hard for, is to develop the relationships with the sellers that we work with. Because again, I mentioned this many times before, the first pillar of our name is relationships as a cornerstone for success. And when we look at different segments within the market, we try to look where we can take what works best in those different segments and apply it to our work. I will say that that's one area where I think SMB gets it right, is the relationship that they build with those sellers. Thanks for watching. Love to hear what you think.